Have you ever seen the market surge right after bad news? Or collapse without hesitation while the whole world is celebrating strong data? When we are stuck in a trade, we usually blame our technique. We blame the news. We blame our own psychology for not being strong enough. But very few people stop to ask a simple question. Is the belief I'm holding on to really mine? Or is it just a belief being passed around by the crowd? I used to believe a lot. I believed in charts. I believed in indicators. I believed in so-called high-probability signals. And then I lost. Not because I was incapable, but because I was believing in the same direction as too many others. In this market, when you think like the crowd, you are often standing exactly where someone else wants you to step in. I clearly remember a period when Bitcoin was overheating. Everywhere online, the message was the same. There's still time. Get in now. Financial media called it a new era. Everyone was afraid of being left behind. A friend sent me a photo. An elderly taxi driver had sold all of his assets to buy Bitcoin. At that moment, I wasn't excited anymore. I felt uneasy. I went to ask my mentor. He didn't look at the chart. He didn't read the news. He asked only one question. Is everyone convinced the price will keep going up? I nodded. He said nothing more. The next day, he placed his first sell order. Price started to fall. The crowd panicked. And he said, slowly, a sentence I still remember to this day. When belief reaches its peak, that is usually when the people who truly control the game have already left the table. That moment completely changed the way I see the market. It wasn't the market that deceived me. I arrived too late to a belief already shared by thousands of others. My mentor doesn't trade charts. He trades by reading crowd psychology. He doesn't try to predict where price should go. He simply observes, what does the crowd believe and how strongly do they believe it? Because the market does not run on logic. It runs on exploiting the collective misbelief of the majority. In the next part, I'll show you how my mentor looks straight through those beliefs, like turning a mirror around, and why he only acts when the crowd has believed too much in one direction. But before that, remember this one sentence. The market does not create pain. Mistaken beliefs about the market are what wipe people out. What I've just shared with you is only the beginning, a very small step on the path my mentor once led me through. If you think this is just an opinion, just a personal perspective, you may miss an entire way of thinking that has allowed me to survive in this market for many years, not only in Forex, not only in crypto, but in any arena where capital flows and human psychology still decide the game, stocks, bonds, or any other financial market. I'm not here to prove how good I am, and I'm not here to teach you how to enter trades. I'm simply recounting what was passed down to me, fragment by fragment, seemingly disconnected, but when put together, strong enough to keep someone from being swept away when the crowd begins to lose control. Those fragments kept me standing while hundreds, even thousands of others lost everything to the market. Not because they were foolish, but because they believed too deeply in a familiar idea. This time is different. If you haven't watched part 1, where I talked about how my mentor views the market from a macro perspective and why he never opens a chart before knowing where the big money is flowing, I honestly recommend going back and watching it first. Because without that foundation, most of what you believe is likely nothing more than collective reflex. And now we move into part 2. This is where my mentor begins to reveal one of the most important lessons he ever taught me: how to read the beliefs of the crowd, to know when the market is about to turn against them. You might be thinking right now, everyone talks about crowd psychology, but my mentor never observed the crowd the way most traders do. He doesn't measure fear by red candles. He doesn't measure greed with indicators. He doesn't label it support, resistance, breakout, or retest. He calls it organized blindness. I once asked him a question. How do you know when the crowd is wrong?
He didn't answer right away. He poured more tea, stayed silent for a moment, and then said slowly, "When people spend more time defending their belief than questioning it, they are no longer analyzing. They are preparing to pay the price." I've seen that pattern repeat across every market. When Bitcoin reached $65,000, people said 1 million was only a matter of time. When US stocks hit their peak, they said the Fed could never raise rates aggressively. When gold went up, they called it a once-in-a-lifetime opportunity. When gold went down, they said it was just a technical correction. I used to be one of them. Maybe you were too, or perhaps you still are. My mentor never told me where price would go. He taught me only one thing: observe belief. Not signals, not patterns, not news. Just this: what the crowd is saying and how strongly they believe it. Because there is one truth my mentor has always believed, and one I still believe today. The market does not operate on truth. It operates on how the majority believes in what they call the truth. And next, I'm going to tell you a story. If you've ever lost money by trusting analysis, by following signal groups, by believing in can't-miss setups, this story may leave you silent for a few minutes looking back at yourself. It's the story of the only time my mentor placed the largest trade of his entire life. Not because he saw a signal, but because he saw something that no one else in the market could see at the time.
And if you stay until the very last second, I'll tell you the sentence my mentor said right after he won that trade. A sentence that made me stop seeing the market as a place to win or lose and start seeing it as a place to survive longer than the crowd. I remember that moment very clearly. The entire market was exploding after an unexpectedly positive piece of news. People called it the last chance to catch a major move. Trading groups were in chaos, like a festival. Everyone had a reason to FOMO, yet very few realized they were preparing to become liquidity for bigger players. I brought the chart to my mentor, a setup that looked perfect, news strong enough to convince anyone that this time couldn't fail. I said, "I think this one is a sure thing." He didn't look at the chart. He didn't ask what the news was. He asked only one question: how many people are thinking the same way you are? I hesitated, then answered, "Probably almost everyone." He smiled slightly, said nothing more. He simply slid a small piece of paper toward me. On it was written one line: "The crowd is not wrong because it is large. It is wrong because it has stopped asking questions." That day, he entered the trade. He told no one, made no announcement, offered no explanation. 3 days later, the market reversed. Price collapsed. The cheers from days before disappeared. The analyses that once flooded every channel went silent. He made a large profit, not because he was smarter than everyone else, but because he was patient enough to stay quiet, deep enough to observe, and cold enough to act while everyone else was euphoric. I asked him, "Why did you dare to place such a large trade when everyone believed price would keep going higher?" He looked at me for a long moment and said slowly, "Because I could see they were no longer analyzing, they were praying. And when people begin praying for a scenario, it means they have placed their belief too deeply into it. Any belief pushed too far in one direction will eventually be used by the market to turn against those who hold it." That was the first time I understood something very simple. The market doesn't need you to be right. It only needs you to be aware. And if you become aware before the crowd does, you don't need to be smarter than them. You only need to survive longer than they do. Next, I'll share with you the 3 signs my mentor used to recognize when the crowd's belief had reached its peak and when it was time to step back, even as everyone else was still shouting, "Hold on." If you've ever lost money simply because you believed too much, you shouldn't skip this part. My mentor had no formula, no checklist, no complicated system. He only observed,
in silence, with patience and discipline. And he always told me one thing: when all three signs appear at the same time, even if price hasn't turned yet, I'm already ready to leave. The first sign always appears quietly. No noise, no drama. It's the moment when the crowd stops analyzing and begins lecturing. My mentor once said, when a trader stops asking questions and begins stating with certainty that price must go up, that it cannot go down, that is no longer thinking. That is belief under hypnosis. I once watched a friend live stream for nearly an hour, drawing one pattern on top of another, pulling Fibonacci levels, adding news on top of it all. Everything looked perfectly logical, at least inside his own head. The goal was not to check whether he might be wrong, it was to prove that he could not be wrong. 2 days later, price cut straight through everything he had drawn. No hesitation, no permission. Because the market doesn't listen to your explanations. It doesn't care how strongly you believe. It only cares how much you still have left to lose. The second sign comes right after that. The tone of the media begins to change. No more possibilities, no more scenarios, only phrases like the last opportunity, get in before it's too late, a new era has begun. My mentor never reads the news like someone searching for information. He reads it like a psychologist. When headlines start using emotion to push people into action, he sees it as the final shove, not to send price higher, but to pull in the last wave of late buyers. He once told me something very simple and very real. When taxi drivers, street food vendors, and families in the same apartment building are all talking about the same ticker, the game is usually close to ending. Not because they are foolish, but because belief has reached its final level. The third sign is the most dangerous because it happens inside you. It's the moment when the people who should be doubting start convincing themselves. Have you ever been there? You buy, price moves against you. Instead of exiting, you open YouTube. You look for more analysis, join more groups, read more articles. Not to find the truth, but to find someone who says what you already believe. You hope to hear a confident voice telling you you're not wrong. My mentor said, when someone stops searching for the truth and begins searching for agreement with their belief, they are no longer trading, they are gambling with something called the ego. And if you've fallen into any one of these three signs, you were just like me in the past. Not lacking intelligence, just pulled into the crowd without realizing it. I used to think that after so many losses, after being slapped by the market so many times, remembering these three signs would be enough to stay out, but it wasn't. The market doesn't repeat itself. It imitates your emotions, then hits you precisely when you begin to understand you understand. And at the exact moment you feel smart enough, the crowd puts on a new costume. Quieter, less flashy, more mature. I've seen them stay silent, no FOMO, no shouting. They learn to wait. They learn not to buy the top. They call it progress. But my mentor shook his head. He said, silence is not the same as awareness. Very often, silence is just the preparation to believe one more time. Because the root problem is not how much they talk. The root is that the old belief is still there. They still need something to hold on to, something to prove that they were right. When price goes up, they say, I told you so. When price goes down, they say, it's just a correction. When they are wrong, they say, the market is abnormal. But almost never do they ask, what if I am the abnormal one? That was the moment I began to understand my mentor deeply. He doesn't hunt for perfect entries. He looks for the gap between belief and reality. The market, he said, does not change direction because of news. It does not reverse because of indicators. It turns when collective belief is stretched to the point where it cannot be stretched any further. And next, I'll tell you how my mentor identifies the point of error, what he calls the thin line between reality and illusion. If you can see that line early enough, you don't need to win many trades. You only need to stand on the right side at the moment the world begins to lose its way.
There was a question I carried with me for a long time. A question that became harder to answer the longer I stayed in the market. I asked my mentor, how do you know where the market is wrong? How do you know that what the entire world believes is actually not true? He didn't answer right away. He just sat there, looking out the window for a long time. Then he spoke slowly, almost as if he were talking to himself. The mistake is not on the chart. It lies in the gap between how the market behaves and how people believe the market should behave. At the time, I didn't fully understand. It sounded abstract, but years later, I realized something important. My mentor wasn't searching for signals. He was searching for cracks in consistency. He paid attention to moments that feel uncomfortable to most traders, moments when everything looks right, but somehow doesn't fit. Extremely good news comes out. Expectations are very high, yet price barely moves and then stalls. The crowd is excited, but large money stays silent. In those moments, my mentor doesn't enter a trade. He doesn't try to call the top either. He simply prepares. He watches the market like a hawk flying low through fog. No strike, just observation. When crowd psychology begins to explode, but price reaction remains cold, it is often a sign that someone is preparing to rewrite the entire narrative. My mentor calls this moment, money is not speaking, but it is acting. He doesn't need to study candles. He doesn't measure volume in the usual way. He asks only 3 questions, always the same 3. First, what does the crowd believe? Second, who benefits if that belief continues? Third, does price reaction truly match the level of expectation? If even one of these is out of sync, he becomes alert. If all 3 are out of sync, he knows he only needs to wait for the first reaction, not to predict, but to confirm. I once witnessed him sell a currency pair while every report showed strong fundamentals. No one was talking about risk. There was no bad news, no shock at all. 12 hours later, price collapsed. Not because of an event, but because a truth slowly surfaced, that the crowd had believed too early, too deeply, and by the time they realized it, there was no way back. That was when I understood something critical. The market has no perfect entry. It only has points where belief is wrong. Those who recognize them early survive. Those who recognize them late become liquidity for others. And next, I'll tell you about the trade that completely changed the way I step into the market. It was the first time I applied exactly what my mentor had taught me. No indicators, no patterns, only the silence of money and the noise of the crowd. I remember that night very clearly. US CPI data came in better than expected. So good that everyone believed the US dollar would surge aggressively. Price had just broken the previous high. Volume ticked up slightly. Market sentiment felt euphoric. Across forums, there was only one message. Why wait? Just keep going. I opened my platform, looked at the chart. Honestly, my hand felt tempted, but then I stopped. I shifted my focus to money flow, scanned the heat map. The breakout volume wasn't convincing, just light, short pushes, as if someone were making small moves to pull late buyers in. And in my head, I heard my mentor's voice. When the entire world believes it cannot be wrong, that's when power begins to do what no one expects. I placed a small sell order, just a probe. No rush, no overconfidence. I told no one. I simply felt that something didn't align. And if I was wrong, I was ready to cut the loss very small, without hesitation.
Because from that moment on, I understood one thing clearly. In this market, what matters most is not how many times you are right, but whether you are aware enough to recognize when you might be wrong. There is one principle my mentor repeated so many times that at first it felt almost cruel. If you're wrong, let the market kick you out quickly, but if you're right, don't hold back. I always enter with a small position first, not because I'm afraid, but because I need the market to confirm. My stop loss is always placed very tight, exactly at the point where if price reaches it, I know I've read the situation wrong. No widening it, no excuses, no lying to myself with hope. If I'm wrong, I leave immediately, clean, light, without emotion. But when the market starts moving in the direction I've been observing, the story changes completely. In the first 10 minutes after entry, price spikes slightly, a familiar pullback, something I've seen countless times before. I don't flinch because I understand that this is often when the crowd is given one last dose of belief before everything gets turned upside down. 30 minutes later, the first candle changes color, not strong, not decisive, but enough for me to know the market has started to speak. An hour later, the previous low is broken. At that moment, the probe trade is no longer a probe. I increase my position. No hesitation, no need for further reasons to doubt myself, because now I'm not acting on emotion, but on a chain of confirmations prepared long before the trade. 3 hours later, USD JPY drops fast. No noise, no bad news, no logical explanation appears. Those who had just bought are left staring at their accounts evaporating, unable to understand what just happened. I keep the position, not out of greed, but because every signal I'm tracking is still intact. I exit only when the drop begins to slow, when momentum weakens, and when money flow starts to diverge. That trade gave me a very large move, but what I gained wasn't just profit, it was confirmation of a principle I still live by today. If you're wrong, lose small, but if the market proves you right, have the courage to go all the way. In trading, the difference between someone who lasts and someone who disappears is not about who wins more trades. It's about who knows when to let go and who has the nerve to strike hard when a real opportunity finally appears. After that trade, I didn't consider myself special. I knew only one simple thing. I had survived. Survived in a market where thousands of others were being drowned by their own beliefs. I no longer try to be right all the time. I only need to stand on the right side at the right moment and remain quiet when the entire market is screaming. If you've listened this far, you're probably no longer hearing this video as just content. You're listening as if something is shifting in the way you see the market. And that is exactly what I hoped for. What I've shared with you is not a trick, not a script for catching tops or bottoms. It is a survival framework, passed down from a mentor with no name and no fame, but with the ability to endure through decades of account wipeouts. Part 1 is the macro gateway, Part 2 is the map of crowd belief, and Part 3 is the central piece that holds the entire structure together. That's where everything begins to connect. That's where you'll understand why some people never fall apart during the most critical moments. Not because they are more talented, but because they see the market through a structure most people have never seen. I won't reveal what comes next, because the next part is not for those who are just listening out of curiosity. It's for those who have truly begun to step away from the crowd. I'll see you in the next part, where you'll realize that without this missing piece, you've been trading like someone assembling a puzzle without knowing the central piece was never there.